story today is crude oil. Prices of crude oil have surged the most in almost a year. It's happened after that surprise announcement by OPEC Plus, a production cut. It threatens to worsen inflation and push global central banks to tighten monetary policy even further. Treasuries have fallen, the dollar has risen. Brent crude heading for the biggest gain since April 2022. But what's the likely impact on oil explorers and oil marketing companies? Let's put this in context. From our research team, Ashesha is joining us to tell us about the likely impact. Ashesha.
Well, yes, absolutely. Brent crude prices have risen nearly 15% from their March lows. In fact, after falling below that $75 per barrel mark, they've started rising yet again. In fact, they're now at about $83, $85 per barrel mark. Why is that? Saudi Arabia and some other oil-producing OPEC Plus countries have announced output cut, and that is the primary reason oil prices have started rising yet again in the international market. Let's now understand the kind of impact surge in global crude oil prices has on individual sectors and companies back home in India. First up, we will talk about oil explorers, the likes of ONGC, Oil India, Vedanta and HOEC. These companies have positive impact, and that is because higher crude oil prices means higher earnings for these companies. In fact, every $5 per barrel change in crude oil prices increases EPS of ONGC by about 7%, and it increases EPS of Oil India by about 12%. Let's move on to oil marketing companies, the likes of HPCL, BPCL, Reliance Industries, MRPL and Chennai Petroleum. For these kind of companies, the impact is rather mixed, and that is because marketing margins reduce as crude oil prices gain. Meanwhile, inventory gains is what these companies register because of surge in crude oil prices, and hence these companies register mixed moves on account of the change in crude oil prices. In fact, every $1 per barrel change in increase in crude oil prices impacts petrol and diesel margins of these companies by about 40 paise per liter. In fact, there are some other sectors which are negatively impacted. These are the sectors which use crude oil as their major raw material. These includes the likes of paint companies, we have tire companies, aviation or airline companies, cement companies, tire companies and several other lubricant manufacturers as well. Apart from this, on the overall economy as well, increase in crude oil prices has a negative impact, and that is because India imports close to about 85% of its crude oil requirements, and every $10 per barrel increase in average prices of Indian crude oil basket could increase current account deficit by about 14 to 15 billion US dollars, which as a percentage of GDP translates to about 0.4%. So this is the kind of far-fetched impact increase in crude oil prices has on the Indian economy, oil explorers, oil marketing companies and other sectors which use crude oil as their raw material.
All right, Ashesha, that helps us put in context, but to get further perspective on this, let's bring in the experts as well. Kunal Shah is Head of Research at Nirmal Bang Securities, and Bjarne Shcieldrop is joining us. He is Chief Commodity Analyst at SEB Norway. Great to have you both with us this evening. Gentlemen, Bjarne, coming to you. How surprising was this move by OPEC Plus to you, and how deeply do you think it's going to impact the course of oil prices that were on a downward trajectory in recent times?
Right now, and there were no signals ahead that it was going to happen now. Nonetheless, I mean, we've been saying all the time that we are positive to oil, amongst others, because OPEC has a lot of dry powder to cut. I mean, prior to this cut, and as of today, Saudi Arabia is producing 10.4 million barrels per day, and well above normal production of about 10 million barrels. So after this announced cut of 500,000 barrels for Saudi Arabia and another 500,000 barrels per day for the other non-Russian OPEC Plus members, you know, Saudi Arabia is just down to normal production of about 10 million barrels. So even after this cut, Saudi Arabia and the other OPEC members have a lot of further capacity to cut production if needed. They have full control of the oil price and the oil market, and especially due to the fact that shale oil production growth now is muted and slowing, with US oil rig count falling since early December last year.
So these kind of pressures as far as the oil prices are concerned are going to be telling as far as equity markets around the world are concerned, Kunal, and Indian markets won't be an exception. What levels do you think they'll hit on the upside, and how will those prices impact both upstream and downstream stocks within Indian equities?
Okay, so first question, how it can go up. So you have to understand this psyche, where after the COVID, everyone has understood how to control the prices. So OPEC is now clearly understood. At the time of OPEC, at the time of coronavirus crisis, OPEC basically came up with a humongous production cut, and that revived the prices from the ABs. So right now, what they are doing is similar thing. They know that the global economy is heading for the weak quarter or weak time going forward, and hence they have preempted that and they've done the production cut. Now, what material impact? Now, in a bull market, this would have caused rally of $10 to $15, but that hasn't happened right now. So oil prices are just up by 6% right now. But going forward, another 3 to 4% spike cannot be ruled out. Brent can test $90 to $92. That's it. I'm not expecting any major rally post that. And I'm expecting, talking about WTI. So I'm expecting
Kunal, I'll come back to you in a moment. Do take a sip of water. Bjarne, do tell us where you think oil prices could head. And as far as inflation is concerned, how will it impact it? How deeply do you think it's going to impact the decisions of central banks around the world? Because we were on a rate hike cycle, but we seem to have been peaking. Now, do you think that's going to be pushed back, the peak of our interest rates?
Well, I think we must face the fact that this current oil cycle is very, very different from prior slowdowns in economic activity due to the deep reduction in jet fuel demand that we saw under 2020, 21, 22. And global jet demand is now recovering. So even though if the higher interest rates in the US and the EU and other countries is slowing down the OECD economy, we are still seeing jet fuel demand ticking higher by maybe 100,000 barrels per day per week, close to that. But we're still 2 million barrels per day below the 2019 average of 8 million barrels. Yeah, we are only at 6 million barrels per day. So further normalization of global jet fuel demand means yet higher demand for oil products, specifically jet fuel. So even if we have a weakening in the global economy due to higher interest rates, we still have a strongly rising oil product demand for specifically jet fuel, which is a diesel product. So, we think that first and foremost, OPEC is in very good control of the market. And secondly, demand is actually rising despite the fact that we have cool down of the global economy. And then the question about inflation. I mean, remember that last year, Brent crude averaged $99 per barrel, and we're still only at $85. So as of now, if this is where the prices deliver, we actually have a deflationary effect of the oil price. And even if price average $100 per barrel this year, the effect on inflation is neutral. So I think we rather should think of the higher oil price due to the OPEC cut and the rising jet fuel demand as a taxation of the global economy, just as the higher interest rates in the US and the EU are slowing down the economy, so will the higher oil price be a cooling effect with a taxation of the global economy. So I don't think it's necessarily going to have an inflationary effect of the global economy. But of course, Biden had hoped that we would see 80, 70, and then maybe $65 per barrel, and then actually a strongly deflationary effect from the oil price, lower gasoline prices, happy US consumers, and then re-election in 2024. So this is not according to the wishes of Biden, that's for sure.
Well, certainly Biden and the rest of the Western world that stands in opposition to Russia, but currently it seems like OPEC Plus is supporting Russia, going by their sudden decision, the surprise decision to cut production. But keeping the rising oil prices in mind, Kunal, now as far as India is concerned and our need and demand for oil, this normally has a telling effect on the inflation story because as an input, commodity prices going up never bodes well when it comes to corporate earnings as well. Do you think this is going to have in the coming quarters a telling impact on the kind of corporate earnings that do get reported and that's going to change the course of the markets in a significant way? Kunal, you may want to unmute yourself.
Yeah, sorry, Vikram.
Sure.
I don't think so. It's going to have any significant impact. This is like a sort of scenario, Cold War sort of scenario, where the West is trying to bring down the inflation, and Russia and OPEC plus Saudi Arabia used to be US ally, which no longer be a strong US ally right now. And if you see what is happening is, at the time when the inflation is about to drop, okay, at that time we are seeing the major production cut. So this is a big divergence in terms of the policy of the Russia and oil producers and the West. The West are facing the brunt of inflation, and the OPEC Plus is saying we don't care about it. But the fact remains is, why this is happening is that going forward, there is expectation of the weakness, economic weakness, because the rates have moved up from 0 to 5%. So the things are not going to be as rosy as it seems right now going forward as we progress. So I believe that oil prices are going to go up, but not to the extent that it's going to have a major impact on the Indian economy. Remember, at the time when we saw Brent oil testing $130, $125, at that time and this time, the conditions are quite different. So we are in a much better position to accept this kind of supply shock. And I don't think so it is going to trigger any major selling or any major weakness in the Indian markets going forward.
Well, we'll continue to track the markets. The impact of rising crude oil prices, as sudden as it is, but and for that, of course, we'll always have our experts. Bjarne joining us from Norway, and Kunal, of course, here in India. Thanks very much for joining us with your perspective on this edition of India Tonight.